Good afternoon, everybody. My name is Elliot Luke. I'm a partner at Clifford Chance here in Perth, where I do a lot of work in the mining sector and critical minerals. I'm also a director and the chair for WA and South Australia of the Australia Latin America Business Council. So you'll be hearing from me a little bit later on this afternoon on the panel that we have planned on Latin America. But before we get going with that, we're going to have a number of speakers step up and discuss their exciting projects in the critical minerals space. The first of whom will be Raj Surendren. He's the Chief Executive of Tianqi Lithium. Paydirt's Dominic Piper is going to step up and ask Raj some questions in the form of a Q&A. If you would like to join me on the stage. Sure. Now, Raj, I am told, is a seasoned C-suite executive with more than 30 years' experience across finance, operations, business development, strategy and commercial leadership in Australia, Africa and Asia. He's held senior roles in transport and logistics, mining and energy, including leadership positions with Horizon, Wesfarmers, BGC Australia and Duet Group. Raj joined Tianqi Lithium's Kwinana operations in 2019 as General Manager Finance, later becoming COO of the newly formed TLEA joint venture in 2021. He was appointed CEO in October 2022 and now leads TLEA's strategic growth and operational performance. So without further ado, I'll hand over to Dominic.
Thank you, Elliot. I neglected to give you my biography. Includes, I was the most improved player at Shamrock Rovers under 18s Division 2 team. And that's the end of my biography. Thank you very much, Raj, for joining us. Not to reveal a little bit behind the curtain, but Raj and I and Sharon were talking about some questions, some topics we could talk about, and we came up with a whole list of them. And then the state government kindly just delivered us a brand new topic to suddenly dive into this morning. So, Raj, we felt that it'd be appropriate that I ask you first of all about the government's announcement this morning regarding relief for the lithium hydroxide producers here in WA. But I suppose even before that, we need to explain who TLEA are, and really the structure of the corporate structure of the company and of the joint venture that operates both Greenbushes and the Kwinana hydroxide facility. So can you take us through what that looks like? Because I know there's a lot of confusion at times in the local marketplace around that.
Sure. Thanks, Dominic, and thanks for having me here today. So just quickly around the structure, TLEA, Tianqi Lithium Energy Australia, is a joint venture between TLC, Tianqi Lithium Corporation from China, which is dual listed in Shenzhen and Hong Kong, and owns 51% of the joint venture, and the other 49% shareholder is IGO, which is an ASX-listed company here in Australia. Joint venture has been around since July of 2021, and within the joint venture, there are two assets. One is a 51% ownership of the Greenbushes mine, which is held in joint ownership with Albemarle, who owns 49% of the mine. So there are two shareholders at the Greenbushes, which is TLEA and Albemarle. And at the TLEA level, the other asset that we have is a lithium hydroxide conversion plant, which is 100% owned down in Kwinana. So that plant was originally constructed by Tianqi, designed and executed back in 2015, 2016, and we're currently operating that plant.
Great. That clears it up for everybody. Now we understand the structure. So, I mean, very relevant then, the hydroxide announcement this morning from the state government. Can you talk us your initial thoughts on that announcement? And I suppose at a high level, I mean, is this something that the company has been pursuing the government around or encouraging the government to look at?
Yeah, look, the announcement today was definitely very welcome and is an extension of what they've already had in place since, when they first announced it, I think back in November or December of 2024, and has been in place. It's the Lithium Industries Support Program, or LISP, as we call it. and they've extended it for another year. So the initial support was for 2 years, 2025 and 2026, and now they've extended it for another year to the end of 2027 under, I would assume, similar conditions and certainly the same dollar value in terms of support. We, I think we played, when I say we, I think Tianqi Lithium, myself and my colleagues played quite a strong part in lobbying government back in 2024 and in terms of the type of support that made sense for the industry and the type of support that made sense for the government to provide, not just free handouts, but actually, the support, when you look at what the support's aimed at, particularly for converters, it is about actual costs that we're facing on a daily basis with government agencies that try to contract with us on a very commercial basis, and with startup plants that doesn't work. So the government was very good, very receptive in firstly listening, understanding, and then putting in place the support program. So we are very grateful for the extended support and certainly for the initial 2-year support as well.
That would suggest then that TLC and TLEA still have a confidence in the future of Kwinana. We've read a lot in the media about, and we've heard discussions today about the future of lithium hydroxide conversion here in Western Australia and our inability to be competitive on a global stage. Do you remain confident that Kwinana can reach a position of competitiveness on the global stage?
Yeah, look, I think so. We certainly, to answer the first part of your question, our shareholders, TLC in particular, has had a very patient, long-term view around the industry, have been in the industry for 30 years, understand it really well, obviously, and the dynamics around it. And certainly, we have a strong view that when I say we, the TLEA management, and we continue to work on this in terms of ramping up the plan and getting ourselves to nameplate. We're not quite there yet. It's well publicized and documented, the issues that we've had with the original sort of design and execution. Remembering this was the first of its kind ever built outside of China, and in a jurisdiction that never really dealt with a plant of this complexity or chemistry, for that matter. So, in terms of being competitive, yeah, look, we absolutely believe we'll be competitive with just about every jurisdiction. The jury is still out on how competitive we will be with Chinese converted lithium, right? And I think that goes for just about any commodity out there. You look at nickel and whatnot. So the challenge for us is to continue to improve, and we're doing that every year. We operate in a state that's got world-class resources, got a very strong democratic government, strong infrastructure, great resources, and a skilled workforce. So there's no reason why we can't keep improving, bringing new technology to our business, to our plant, to make ourselves competitive. We are already halfway there, and we think it's not long before we get to the point where we will be able to compete with the best out there.
Does it, one of your JV partners or one of your owners, as I say, IGO, have been quite vocal at times in their skepticism about the future of the operation. Does that make it difficult to prosecute an argument that this is a long-term proposition for Western Australia and for the company?
Look, it doesn't make it easy, put it that way. I think the skepticism is not just in regards to our plant. I think that their skepticism is about midstream processing in general here in Australia, manufacturing here in Australia. I think there's a lack of belief that we could ever be competitive. And to be fair, there's a lot of evidence that points to that. But I think at the end of the day, and so the impact of that narrative out in the market certainly doesn't help us in terms of dealing with staff that are nervous in difficult times. We have higher turnover. We have to work really hard to retain staff, and we do that quite well. We've got recently we were celebrating anniversaries, 8-year anniversary, 7-year anniversary, 6-year anniversary. So we are able to retain those staff despite that narrative, and retain the IP that we've built up over a number of years. We also have got issues with our vendors and our customers who get nervous about, are we going to be around? Are we going to be able to meet our commitments? And so we have to work with a great amount of transparency and clarity, work extra hard in commercial negotiations in trying to make sure that the conditions reflect our true operating position as opposed to the narrative that's out there in the market. So whilst it doesn't make it difficult, it doesn't make it impossible to keep operating at an efficient and productive level.
You mentioned you'd been speaking to the government, state government, a lot about the extension of the relief package and the support package. What about broader government initiatives? What would you like to see? Where can the government play a role in making an Australian mid-tier, midstream, downstream industry competitive?
Look, there's the standard answer around simplifying your approvals, getting your more infrastructure, cheaper energy. I think the one thing that can make a big difference, that does make a big difference in China for us, is the ecosystem around the industries, the industrial clusters that we don't have here in Australia, right? That's quite prevalent in the Sichuan province, for instance, or Jiangxi, where, and what I mean by the ecosystem are the vendors, the suppliers, the experts that can support this industry, that can deal with problems, technical engineering problems very quickly. Being a pioneer in this industry here in WA has meant that every problem that we face, technical, electrical, commercial, chemical, we have had to develop ground-up solutions for it. We've relied very heavily on TLC from a technical perspective, but at the end of the day, operating in Australia presents its own set of technical issues, operating issues that we've had to develop ourselves. So that is added to cost, that is obviously added to the time that it's taken for us to get up there. So I think what government can help do is try and help build the ecosystem that would make those sort of solutions, not just for us, but for subsequent plants that are coming along, easier to operate, help lower the cost. And it could be as simple as things, for instance, we rely quite heavily on sulfuric acid, the use of sulfuric acid as part of our process. We've got to import a lot of that. It's having ready-made supplies here, ready-made supply of caustic. It's having the ability to deal with byproducts. All of our plants produce massive amounts of byproducts. All of them can and do have commercial uses for that. But we industry on our own have had to work really hard in developing those commercial uses for them. And these are the areas that government can help us, or help the industry, not just us, but help the industry in terms of having a long life, in terms of ensuring the business case for future investments or brownfield investments actually stand up. Because these, disposal of byproducts, in round figures for us at nameplate could cost us upwards of $50 to $60 million a year. And that can kill a project if we've got no way of dealing with it.
But there was a small mention in that announcement this morning around $5 million for assistance in byproduct development. Is that fair to say? And is it approvals that stand in the way of being able to use our byproducts in concrete and so forth? Okay,
so to be clear, with the hydroxide plant that we have 3 byproducts, and for every ton of hydroxide we produce, there's approximately 10 tons of byproduct. The 3 byproducts, the main one being aluminum silicate, is I think what today's announcement was aimed at. The other 2 byproducts are sodium sulfate and gyplime. And I've got to say, we have managed to find commercial off-takers for all 3 of our products. In fact, sodium sulfate, we've been sending overseas for use in the detergent, in manufacturing detergent and ceramics. Gyplime, we've got farmers down south using it on their soil down there as a soil ameliorator, and with aluminum silicate, we've spent a lot of money in research and development as well as in commercial negotiations to try and find commercial uses for that. And it is, because of its pozzolanic properties, it goes really well in the construction industry. And I think that $5 million is about, like you said, helping the industry here in WA develop commercial uses for the product. But it requires things like the Australian standards coming into play, which is also in play, but not quite there yet. It's been accepted. TAS has been, or DBS has been accepted as a pozzolanic material, but it hasn't been accepted in the standards for cement as yet, so it can't be used in your concrete slabs, in your concrete construction and so on, which is where the large market is.
Yeah, great. We've talked a lot about Kwinana, and we've already, it feels like we've gone in a time machine because it's already saying that we're nearly up in time. We talked a lot about Kwinana and the challenges and the problems, the complications facing that particular project. But sort of underpinning that project and really underpinning the entire industry in Western Australia is your other major asset, which is that holding in the Greenbushes mine. It's such an iconic operation. Do you suffer or do you have to negotiate those same lithium cycles, price cycles, that other operations talk about? How do you manage that operation through those cycles?
Now that is a good question. The Greenbushes ore body is there's nothing like it in the rest of the world, right? It's been around for a long time. There's close to 500 million tons in resources at a grade of approximately 1.7%. There's nothing like it anywhere in terms of scale, grade, longevity, in terms of consistency of performance. And what that does is it provides us with the resilience to deal with the cycles, up or down. Obviously, in up cycles, not an issue. In down cycles, given that quality, we are able to be very deliberate and measured in our decisions. We're not rushed. We don't have to make binary decisions every time the price moves. We're able to focus on ensuring safe and reliable operations, prioritize cash flows, look at lowering costs, continue to invest in our people and our capabilities and our asset reliability. And having strong shareholders at that level helps because the board or the shareholders are able to focus on the long-term decisions rather than trying to react to a price movement. That means, we might have to turn down operations or put people off. We are not affected by those sort of things. So to answer your question, it poses its challenges. The ore body in terms of its quality poses its challenges, but it's a good challenge to have.
Yeah, 1.7%, it makes a lot of things a lot easier compared to the average of 1.2 or 1.3. How does that affect? We've heard a lot today about international cooperation and diversified supply chains and global supply chains. Obviously, you have joint venture partners in Greenbushes as a whole, but in your company, Australian plus Chinese. How does that allow you to position yourselves in that global marketplace? Does having a Chinese partner sort of eliminate certain markets, or are you finding that globalization trend is becoming stronger as you reach out to the world of lithium users?
Yeah, look, it certainly has its challenges, being majority Chinese-owned, certainly with the IRA and some of the European legislation. But a bit like the price cycles that sort of comes and goes, and we're finding it a lot better at the moment. What stands out for us is the quality of our product, is our transparency, is our ESG performance. So regardless of our ownership structure, we're finding that customers are tending to go, that's what we want. Doesn't matter who owns you. We want your product. So, we are opening up markets and opportunities in India, for instance. That's become quite an important market for us. And places like Indonesia and others, there's strong interest. The ownership thematic does play a part when we're talking to European and American customers. Certainly American customers is a real struggle, but less so in Europe, which is taking a more practical, nuanced approach to the geopolitical tensions that affect us with America, for instance.
We talked this morning on a panel about the future of WA lithium and whether the high point has been reached and passed. What are your opinions? Do you think there's still a strong future for the West Australian lithium sector as a whole, and obviously Greenbushes and Kwinana more closer to home?
Yeah, look, I think WA certainly has had its challenges, right? It's unfortunate we've had the Kemerton plant shut. I don't think it's the end for WA. I think WA's got to play it smart. Not every horse in the race can be backed. We've got to be selective in what we back and how we back it and what we try to make out of that. I think what's important is to recognize that WA's got strong resources, like I mentioned, for good government, good regulation, and rather than trying to be part of a bifurcated supply chain, a parallel supply chain to what already exists. I think we should be working with the existing supply chain, developing the interdependencies so that we are valuable to the existing supply chain and take advantage of that because we're already there. What we're often trying to do is trying to carve out a different path that's going to cost money, that's going to take time, it's going to be very inefficient. If we want to survive, and we can survive, we just got to be smarter in the way we choose to do it.
Raj, thanks very much. Unfortunately, we've got the red numbers again in front of us. It feels like we could go on for another half an hour or so. But thank you very much for joining us this afternoon. Best of luck, and I'm sure everybody will be keeping an eye, particularly on Kunana, and seeing the performance there. Thank you for joining us.
Thanks for having me, Dominic. Thank you.
And we'll pass back over to Elliot so we can cross the Pacific.
Well, thank you, Raj and Dominic. And yes, across the Pacific now. The next speaker is Alan Mulligan. Alan is the Executive Director of Harena Rare Earths PLC, a mining engineer with extensive experience in operating, exploring, and developing mines in Africa, a specialist in multi-commodity, multi-jurisdiction acquisition of exploration projects and progressing them through to development. Alan is strong on government relations and progressive in-country relations. Look forward to hearing from you, Alan. If you'd like to.
Good afternoon, all. 2 or 3 years ago, we stood here, Harena, and told you that we were a small private company, and we had just acquired an asset in Madagascar, and that we had about $5 million in debt, and we needed to move forward. Nowadays, we are a LSE listed PLC. We have very little debt, and we have, this is an overview of the company, and you can see the globally significant resource. We are development ready. We're not an exploration company. This asset is significant in rare earths. It's an ionic clay rare earths deposit sitting in northern Madagascar. Our strategy to move it forward is very much US focused. We acknowledge and see a lot of companies are going that way because we want the US in particular and Europe want to take control of their own supply chains in this area. We have very good investors out of the US and the UK, and we're moving forward very quickly. This is an overview of the company. Still small in terms of market cap. We think it's a short-term thing. The board is a mixture of the Australian roots and the new London presence. Ivan Murphy is our executive chair. I am the other executive director on the technical side. Paul Richards is a UK-based non-exec, and the other two directors are Australian, and they were particularly involved in the founding of the company. So the strategic importance to the USA is how we've positioned ourselves. We have an ex-China supply source. We are critical, the material is critical to defense tech right now. And the supply chain resilience, it's right there. We are able to provide the material within a reasonable time frame. So this slide indicates the US support in this area. MP Materials, which is a mine I've just come from in California, has just secured a large investment from the US government to continue operating and to expand. It's quite a good operation. It's quite large, and it's the only operating rare earths mine in the US. Other companies have secured funds. As you can see, Aclara, who's based in Chile and Brazil, have secured $5 million in project development funding. Makango, who's based in Malawi, have secured the same, and we are about to get our approval on that 5 million as well. This is our chair meeting, extensive meetings in the US with all sorts of departments. The DFC are nowadays, it used to take something like 9 to 12 months to get an application through the DFC. Now the number's down to 2.5 months, maybe 12 weeks. This is the urgency that's been given to the initiative by the current government. On the right-hand side are our meetings in Madagascar with government. There's a new government in Madagascar. We, having met them, prefer them to the old government, as I think does most of the population right now. But they are very keen to change the image of their mining industry around the world, and our experience is that they are certainly doing that. So a little bit about the project. It's based in the northwest of Madagascar. We have 100% interest in it, and we haven't yet held any fiscal discussions with government. They come really when you get the production license. So we are currently going for the mining license, which is about to be issued to us within the next several, very short time frame anyway. We are not an exploration company, and I must reinforce this. We are developing already, and it is one of the most significant ionic clay deposits. This is, we've completed the PFS, which is a requirement of the mining license application. The top numbers refer to using an analyst source pricing. I mean, everything in rare earths is around how you price the next 20 years for your particular deposit. And using analyst pricing, we came up with those set of numbers. They're still very good, an NPV of 340. It's a heap leach operation. It's going to do 5 million odd tons a year in heap leach, and it'll produce an MREC concentrate of about 60% in purity, and it'll dispatch that concentrate to separation plants. The lower set of numbers are based on what we call the consensus rare earth pricing, which is we took AI and scraped the entire world's database on pricing and came up with their set of numbers and put them into the model. You can see the location. We have Madagascar is a country with some severe land-based challenges, so you want to avoid road workings and road distance travel as much as possible. This will generally be a seaborne logistics operation. We have 2 ports near the operation, and we have an international airport at Nosy Be Island, which is just there to the northeast. This is the resource, 700 odd million tons at 870 ppm. But one of the, and I'll speak about it later, one of the distinctions of this resource is that it's very much magnet rare earth heavy or biased. So the process is not unlike other rare ionic clay deposits in the world. They generally need to be leached, and this one will be leached with a mixture of salt, generally seawater first in the first phase, and then ammonium sulfate as the second phase. Then the concentrate, or the pond water, will go through nanofiltration plants and produce fresh water, which goes back into the system and into the community, and recycle that material, clean those heaps, and then put them back where they came from. So an output is fresh water, and of course the carbonate at the end of it, after having done some normal precipitation of the very small amount of concentrate that is provided. So in a highlight, it's robust technical and economic viability. In particular, I think is the production is 4,000 odd tons a year, but the value of the magnet rare earths in that is 90% of the concentrate value. So our basket price is particularly elevated compared to some other operations. This slide shows exactly that. You can see 90% of the value of the concentrate is for the rare earth metals. The cerium, which is generally a low-value product that comes through, doesn't recover in this material. So we get about 4% recovery of the cerium, which is great because that means the balance of the basket price is elevated. We also don't get any of the nucleides that come through. As an overview, as an investment overview, all of these things really distinguish the project from others. We're globally significant. We have 200 odd years of resource life or reserve life. The baseline test work has been completed by SGS Canada over quite a while, including a bulk sample. We're now going to start building the demonstration plant on site, and that will consist of a laboratory first and then a test laboratory, and then we'll put some material down and do some heap leaching during this year. There's a very high recovery of the magnets, as I said, and one of the most important things is the geographically neutral supply. So we believe there's already a bit of a push and pull between China and the US, and perhaps Europe even, because Madagascar is a French-speaking nation and an ex-colony of France. So this is the pathway. Obviously, up to 2024 is completed. We're now moving into turning the pre-feasibility study into the definitive one, and that the DFC of the US is helping pay for. We are then going to move to building in the same year the proof of concept or the demonstration plant, as I discussed earlier, and we're hoping and expecting to get to construction during 2028 and therefore production. Just a bit on the leveraging of the US within the ecosystem, as they say. We positioned, as you can see from this slide, in very good places to pick up and interest this extensive billions of dollars funding that the US has put in place in terms of providing a stockpile of rare earths and critical minerals, and also assisting both upstream and downstream development of resources and products. Now, we're seeing a lot of value being associated with companies that are receiving support from the US. As you can see from that graph over there, the yellow ones are those that are already exposed and to the system, and therefore we're also expecting some of that potential uplift to come our way. I mean, the loans supplied by the DFC and others really come quite soft, and they are equity, they're loan-based, they're interest-based, and they're equity-based, but they're certainly not as challenging for companies and developing companies as some of the commercial financing structures that are out there. This is just a quick one on our valuation in terms of the others that are not ASX rare earth companies. We find the ASX model is a little bit, well, it's certainly not relevant to us right now, but it is very exciting and busy area of the market right now. So Aclara is on the Toronto Stock Exchange, Macango is LSE, Critical Minerals is NASDAQ, and of course we are on the LSE as well. So in closing, we have a near-term, well-defined investment to unlock a high return rare earth development, which we think it will be sought by governments and nationals, particularly around the western part of the world. This is some photos from site right now. This one on the left is a team of our workers, newly trained and employed workers local workers from site, busy repairing the road system, which was put in place about 10 years ago. On the right is a profile of the rare earth deposit. You can see it's clay. It's quite simple to pull it out and truck it, or even conveyor belt it to the agglomeration, or the plant will be a ring-fenced process facility on flat land where we will put up very large heap leach facilities and do the leaching with seawater and ammonium sulfate, as I said. Right, and that's that. Thank you very much.
Well, thank you very much, Alan. And our next speaker this afternoon is Will Dix, Chief Executive Officer of Belararox Limited. Will is a geologist with 30 years of mining experience in base metal, gold, uranium exploration and mining. He's previously worked in Central and South America, Africa, and all across Australia. He has extensive expertise in project and team management, as well as significant experience in capital raisings, mergers and acquisitions, and divestments. He's currently a non-exec at Breakthrough Minerals and Stellar Metals, as well as his role at Belararox. So, Will, please join me on stage.
Thanks, Elliot. I might send that brief to my mum. She might be impressed. Thanks for having me, ladies and gentlemen. This is quite exciting being up here and having the opportunity to talk about Belararox. It's been a bit of a baptism of fire for me. I've been in the hot seat for about 3 weeks. And just before that, I managed to spend about 10 days in Argentina and 10 days in Botswana looking at our 2 incredibly exciting copper projects. And I'll just walk you through those this afternoon. You see a lot of these, and not everyone remembers everything that's talked about. So there's 3 key things I want you guys to take home with you today. First of all, it's location. We're only exploring in Tier 1 jurisdictions, and we're surrounded in both of our projects by the majors, so BHP, Barrick, MMG, just to name a few. Secondly, we are a company that's able to have news flow all year round. So we spend our summer from about October to April up in the Andes exploring for copper, big porphyry systems, and then we pivot into Botswana, and we're working in the northern end of the Kalahari copper belt. So we have a full 12-month cycle each year of news flow, which is an attractive thing for investors these days. Thirdly, we're a copper company. Sure, we've had some fantastic silver hits this year, but we are focused on copper. And the reason for that is the simple demand drivers, AI, data centres, EVs, all the electronics that need copper, and there's a constrained supply side. So the forecast is there's going to be around about a 30% shortfall by 2035, and part of that is lower grade mines being mined, and some of it is the existing mines are not being replaced by new supply. So we're very conscious of that, and we want to be part of that supply chain going forward. So what I want to talk about is our 2 projects. We have about 300 square kilometres, 350 square kilometres in Argentina, in the Vicuña Belt near San Juan. We've got the big guys near us. We've got BHP to the north at Filo del Sol, which is probably the greatest discovery in the last 30 years. We've got about 40 million tonnes of copper and 80-odd million ounces of gold currently in development. We've recently been drilling at Toro South. We've hit some pretty exciting silver numbers, 47 metres at about 174, bit of copper, bit of zinc. That's around a 3% copper equivalent intersection. And within that, there's a high-grade zone of 27 metres at about 300 grams per tonne silver, or 7% copper equivalent. So we're using that exciting epithermal style mineralisation to help us vector into, hopefully, a big porphyry copper system, because that's what we're chasing. Over in the Kalahari, nearly 4,000 square kilometres of tenure. We sit immediately along strike from MMG's Khoemacau hub, where they're currently producing around 65,000 tonnes of copper a year, and have recently committed to investing $1 billion in the next 2.5 years to increase that supply to 130,000 tonnes. We're talking big systems, big operations, and we have pretty much the entire northern extension of that belt, and we'll talk about that in a little while. A little bit on the board, so about a $20 million market cap, end of December, $7 million in cash. We've spent aggressively in Argentina over the quarter. So we're in good shape, but we're fully funded through the first period of work that we want to do in Botswana. On the board, we have Neil Warburton as non-exec chair. He sits on a couple of other boards, been around a while. Chris Gale, who's here today, he recently sold Latin Resources to Pilbara for $600 million in mid-2024. Chris brings a fantastic network into Latin America and is a key driver of our team. But the guy I want to talk about the most is right at the bottom. There's a guy called Chris Blazer. Chris is GM Exploration for us. I described him as a unicorn to someone last week because he's technically brilliant, fantastic with people and really commercial. So he adds a lot of value to our team, and he covers across both of our projects in Argentina and also in Botswana. So he's a good guy to have on board. Okay, that's where we are in Argentina. That's our camp at 3,300 metres in the Vicuña district. It's pretty remote. It's a tough place to be when it's windy and when it's cold. But what it is, it's in the middle of all of the big guys finding big deposits, and that's why we're there. We can host about 50 people at camp. Recently, we've had two drill rigs going, drilling out the silver epithermal project that we've got there. But also, we've got guys out in the field, literally horseback and mules and donkeys, looking for porphyry coppers, and that all starts at ground level with guys walking around and looking at alteration patterns on the soil. This is what I mean about being where the big guys are. So this is us in the blue. Just to the north is BHP and London, Filo de Sol. So BHP had been out of Argentina for a long time, and in 2024 they came back in July with a $3 billion investment to buy 50% of Filo de Sol. So that was a big tick for Argentina and for the district in general. Coming down the western side, Atex Resources at Valeriano. They have 8 million tonnes of copper, 10 million ounces of gold. They are on this major Targuis structure that bisects our project. It also runs all the way to the Chilean coast and runs through Hot Chili's project as well, further to the west. To the south of us and the southwest, we have Barrick at Pascualama. That's 20 million ounces. And down at Veladero, they are mining there today 11 million ounce resource. So these are big projects in big systems, and we have about 350 square k's of pretty good real estate in the middle of that, where we're exploring. Next slide. So this is just a bit of a zoom in, and I only really want to talk about two areas here. First of all, Tambo South, where we've got a really large chargeability anomaly that we'll test later this year when the field season begins again in October. And I want to talk about the Toro area. So Toro Central, where we've got the silver discovery, Toro South and the new zone to the south, El Faro. So this red blob at Toro South is closed off to the south there only because we've only put that El Faro tenement into our package in the last month or so. So it's closed off because we haven't done the geophysics, but in reality, that chargeability anomaly that hosts Toro South is extending further to the south down there. So again, looking forward to our next field season in October this year. We'll be going into Tambo South, and I've got a slide on that. We'll be going into Toro Central to keep drilling out our epithermal silver discovery, but also El Faro is the sort of the third musketeer, if you like, of 2026, 2027. And I'll just talk a little bit about both of those. So looking at Toro Central, firstly on the right-hand side here, this red outline is about a kilometre-long geochemical anomaly that grades up to 1,500 ppm silver. So we knew that there was a bit of silver in the system. We went out, we went mapping, and what we identified in here is a number of east-west structures that we think control the mineralisation. So we tested those. We tested one to the south that didn't come back with much, but we tested the second one, and we hit that great discovery hole that I was talking about before. So 47 metres at 172 grams a tonne silver, 4% zinc, bit of copper, bit of gold. That's the one that's around 3% copper equivalent. And within that is the higher grade zone, 27 metres at about 300 grams per tonne silver. So, fantastic discovery. I think the week we released it, it was the second best silver hit in the world that was released. There was something out of Mexico, no surprise there. But, we have a system that has a lot of metal in it. And what we want to use the Toro Central discovery for is to put together the whole rock geochemistry, all the analytical results, all the geology and the geophysics, and try to vector into where we might have a large porphyry copper. It might be at Toro South, it might be hidden underneath Toro Central down here on the northern side of the fault. That's the work that's going on at the moment, and we're really deep diving into what we might have at Toro Central. This is just a sectional view of it. You can see hole 2, 2 separate intersections. The high grade one, 47 metres at 174, including that 27 metres at 300. And then a lower, not quite as good intersection. I think it's about 48 metres at 55. Not too shabby, but certainly this upper intersection was a fantastic start to the drilling program this year. Moving further north, I just want to quickly talk about Tambo. So Tambo sits about 10 kilometres north of Toro. We drilled a hole in here in 2024-25. This hole down through here, it hit 400 metres, at 0.1% copper. So it's not an economic discovery, but it's indicative of there being copper in the system. So what we've done since then is go back in with some more detailed geophysics down this eastern flank, and we've extended this chargeability anomaly well out to the east. So this is a key target for us in 2026-27 when we go back in the field in October. We've got a conductive units through here. Something's causing a conductive response in the geophysics. We're hoping it's a fluid pathway. Our modelling suggests it's a fluid pathway. And we've modelled an intrusive above that and below it. So what we will do is come in with the drill hole, drill down the edge of that chargeability anomaly and see what the geology tells us. We know there's copper in the system, 400 metres at 0.1. You know, as I said, not economic, but it's a really good indicator that we've got copper metal in our system and we just need to find where it's concentrated. So that is going to be #1 target priority in Argentina for us towards the end of this year in October when we go back in. I want to flip now to the Kalahari and Botswana. So I got to Botswana about 3 weeks ago with not low expectations, but not really knowing much about it and not really understanding the work that had been previously done here and thinking, you know, maybe the best targets have been tested. And we spent about a week there, Chris Blazer and myself, and we walked away from there thinking, wow, this is a fantastic opportunity. So we've reset everything over there. We're undertaking an airborne EM survey at the moment. That's underway, and we plan to be drilling at the end of May, and I'll show you why. A little bit on Botswana. I'll skip over this, but it's a highly regarded African jurisdiction, ranks higher than New South Wales and South Australia in the Fraser Institute, and by far the highest ranking of any African country. We're really comfortable there. I've worked all through Africa, East Africa, West Africa. You know, you get off the plane in Botswana, it doesn't even really feel like Africa. It's very westernised, very modern. But why we like Botswana? So, I want to draw your attention to these 2 circles. This is Sandfire's Matheo hub. Sandfire's got about 65 million tonnes at 1% copper. And just to the northeast of those guys is MMG. So MMG has about 450 million tonnes at 1.5. And as I said, they're investing $1 billion in their Khoemacau hub to increase their production from 60,000 tonnes per annum to 130. Belararox has everything here in yellow. So we effectively have the northern extension of this highly prospective Kalahari copper belt. And this zone up through here, the geology trends right the way through it. It's never been drilled. It's had a little bit of surface geochemistry when Harena Mining owned it, but Harena Mining was so focused on this area that's become the Khoemacau hub that they sort of forgot about it. And then the Botswanan government said, guys, you've got to get rid of some ground. You've got too much ground. So they dropped this without putting a drill hole into it. And we were lucky enough to get hold of it about 18 to 20 months ago through a deal that the previous management was able to do. So we really like that. And what we're doing is we just want to focus in on this zone here. And this is a complicated slide, and I apologise for that. But what I want to demonstrate is that you have to be in this part of the geology. This is the contact between the Nuakapan and the Dakar. The names don't matter. What's important is this is the redox front where all of your copper mineralisation is related to. So if you haven't got that, you haven't got the copper. These tram lines that you see trending through our tenement, which is 50 kilometres across by 30 kilometres long, this is the interpretation of where that contact goes. And the reason that there's multiple lines is that this is a folded contact. So it pops its head up after you've had some compression regularly through that belt. So we've got effectively 7 bites of the cherry to drill and do some more work along these trends to see whether we've got an extension of the Khoemacau hub. This is the best undrilled tenement in the Kalahari copper belt. So at the moment, we're doing some airborne EM to cover all of this zone and some other ancillary zones. And what the airborne EM does is it gives us an indicator to get us in the ballpark. So it gets us into the right geology. We know we have to drill that contact. We do diamond drilling, and that lets us orient our position in the stratigraphy, and we want to focus in on this contact position here along these tram lines. It's not complicated. It sounds complicated because they're big words, Nwakapan, Dakar, all those things, but it's a very well-proven, well-trodden path of exploration in the Kalahari Copper Belt, and we're underway. So we're doing the EM at the moment. That'll get us in the ballpark. The diamond drilling that we'll do starting at the end of May will let us know where we are in the stratigraphy, and then we vector from there. It's not necessarily going to happen in a month or 2 months, but we're going to commit to 3,000, 4,000, 5,000 metres of drilling this year, and we'll give ourselves every chance to find something here. Just lastly, that just summarises what I've talked about, so I won't dwell on this because we're running out of time. But we've ranked our tenements. The 3 highest ranked tenements are the ones up in here, and that's where all of our focus will be for 2026. A little bit on the timeline, and one of the things I talked about earlier is we've got 12 months of cash flow, and the reason for that is that Argentina, we're winding up our drilling at the moment. This orange box is super important. This is the reinterpretation. All of your geology, your geochemistry, your assays, your geophysics gets reviewed, gets re-looked at with the benefit of having done a drilling season. So that's important for us. And then we'll be back in here in October, November 2026, looking at Tambo South, looking again at Toro, looking at Toro Central in particular. But in the meantime, this is where the action's going to be. So airborne EM's underway. We've got about 10 days to go. We'll have targets straight out after that, and we'll be drilling these new target horizons from the end of May onwards. Watch this space on that. 11 seconds over, that's not bad. News flow, this is all on our website, you can find it there, but we've got a lot of news flow coming over the next 6 months. It's both countries, it's high impact exploration that we're doing. And as I said, the 3 takeaways: location, we're surrounded by the majors, we are where they want to be, they're looking over our shoulder. News flow for 12 months, and we're a copper company. We want to find a big copper deposit. We don't want to find, 2 million tonnes, 10 million tonnes. We want to find 50 plus million tonnes, and, we're well funded, and that's what we're trying to do. So that's me, bang on time. Thank you.
Well, thanks very much, Will. And we're jumping back now from Botswana back to Argentina. Our next speaker is JP Vargas de la Vega, a Managing Director of Galan Lithium. JP is a Chilean-Australian ministry industry professional with 23 years of experience in ASX-listed mining companies, stockbroking, and private equity firms. JP has been a specialist lithium analyst in Australia and has also operated a private copper business in Chile, has worked for BHP, Rio, and Codelco. He was the founder of Blue Sky Lithium Proprietary Limited, which was the vendor of the original Argentinian assets, and has been Galan's managing director since mid-2018. JP, if you'd like to step up.
Good afternoon. Thank you for that lovely introduction. I've done a lot in the last 23 years, and it feels that we're just starting. This is a very exciting time for us to present Galan. We are an Argentinian lithium developer with a project next door to Rio Tinto at the Andes. So Rio Tinto and POSCO are our neighbors. We have one of the top 10 resources in the world in development today. And importantly, we are going to be a low-cost producer. What got us excited and what is good about Galan is where we're sitting today. We're sitting, I'm just going to go back to, this is our nanofiltration plant. That was the last piece of the puzzle. So that has been along the construction of the ponds that you see at the back of that look dry at the moment. That is the last bit of the puzzle for building a 4,000-ton lithium carbonate equivalent production profile to produce lithium chloride concentrate. And we are the only one, by the way, producing lithium chloride concentrate in the world. And we are going to be producing in the next few months, and our first sale is going to be happening in the second half of 2026. Importantly, from then on, this is our first baby step. We want to expand. We raised money early on this year. We're going to move from 4,000 tons to 5,200 tons. So we have everything in place. We have permits. We have the lot to get Galan into production. And this is something that I'm proud to say that after 8 years, we're finally there. Throw COVID into the equation, throw 2 lithium winters into the equation. Could have we done this in a better way? Yes, there were mistakes made along the way, but the resilience is something that we were born with. We kept going when no one was going forward. We never put tools down. We kept going. We were called all things, but with the conviction was there. The pain was there, and I felt that myself because I put most of my savings and everything that I have into Galan. With the conviction that where we are today, we are a $600 million company at 48.5 cents. So we feel and see that this is just the beginning of the Galan story going forward. And importantly, we have the size to demonstrate that this can be a multi-billion-dollar company going forward. So this goes by itself, and apologies for this. That nanofiltration plant is being built, it's being commissioning now. So if all goes well, within the next few weeks into May, we should be turning on the on switch for the plant to start filtrating. Therefore, we start producing, and as mentioned early on, we'll be into production in the second half of 2026. That's very exciting. Cash flow coming up at a price of $25,000 a ton. I'd like to think that that price is going to stay. No one is talking that there is an undersupply, oversupply of lithium today. The geopolitical changes are demonstrating that lithium here is to stay. This is another cycle. And also why we like Galan is because it's people. We have a strong board. We have Daniel Jimenez. I'd like to highlight him because he was the Senior VP of Commercial of SQM. Most of the people that are in charge of Galans are people with lithium experience. Also, we have Claudia Paul in our board, and lately we have some backup from Israel with Clean Elements, and they've been fantastic in supporting Galan at a time that we needed them the most. They were for us, and we have offer in our board now providing a significant support going forward with Galan. So it's all about people, and as I mentioned early on, we have a strong team in Argentina. The project is located at 4,000 meters above the sea level. We're in the middle of literally nowhere. Yes, it does get cold in winter. And invite everyone that can make it there to let us know when you are there, and we're going to welcome you to have a look because it's not easy to get there. And we like to see what we have. We like to share what we have achieved. And if you are fit enough, welcome to join to our soccer match after day shift, and or a cycle that I usually do around the ponds when I go there. Disclaimer, it takes 2 days to adjust to altitude, so don't do it in the first day. So where we are, we have phase 1 construction. We want to get to 5,200 tons in the near future within 2026. And one of the things that I'd like to highlight, we're going to start getting cash flow. At the same time, in parallel, we're going to be running a competitive process to fund phase 2. So we're going to pass this to a third party to look after the funding of phase 2. However, as we are advancing into cash flow, and depending where the market goes, if there is a chance for us to start adding further tonnage, why not? We have the permits. So it's a function of where we are and how we advance. The nanofiltration plant has been mentioned that can take 6,000 tons. So look, if there is an opportunity to increase production, we're going to be doing so. Phase 2 take us to 21,000 tons. So 21,000 tons of lithium carbonate equivalent in lithium chloride is what pretty much Rio Tinto is producing next door from us at the Phoenix plant. That, as a side note, the Phoenix plant has been operating for more than 30 years. If I take you back into memory lane, the first Sony handycams and those lithium batteries came from Panasonic, and Panasonic outsourced the lithium from Hombre Muerto. So we're not reinventing the wheel. The lithium revolution started in Argentina, it started at Hombre Muerto, and we are next door to it. And the chemistry, I may say, is slightly better than we've seen at the rest of the salt flat. Why is it better? Because we have better grade. It's a gift of nature, and we take it as such. So I mentioned the lithium price and what it's been. Look, we believe that this is going to turn around. And if I use my old cap as a mineral economist, I see this thing is got a strong push. The geopolitical changes that we saw early this year and the high uptake in stationary batteries is massive. And my take is while the US is not uptaking electric vehicles, there is a massive uptake, in my view, from the US for renewables and also for all the artificial intelligence data centers that are coming up. So that's where the US is needing lithium to back up all those servers that are needed for the supercomputers that are coming up. So the US is not excluded from the lithium story, it's in a different form. And there's no coincidence that the AI race, the US wants to compete in this. So the uptake for lithium, to me, is not a surprise. It's taking a different direction or a stronger direction from a 40%. I was reading one of the banks saying that the growth of stationary batteries coming up at that sort of level for 2026. Now, why Galan once again? And I'll take the presentation from early on Greenbushes. If you look at that chart, we are competitive. There's only one mine here in Australia, as a reminder, that can compete with brines, and they've been competing with brines for the last decades. Go back to 15 years ago, and there were three or four companies. There was SQM, Albemarle, Greenbushes, and the old FMC that is Rio Tinto today. That was it. And one hard rock mining competing. Why? Because the grade that was mentioned, 1.7%. So we are part of this unit cost of low operating costs. And whilst everyone is happy today with the prices going, everyone in Australia is very optimistic about the future, and there's enough lithium for everyone, by the way. When the winter comes, and it always comes, I've seen it happen a few times, we're going to be resilient and going to be there. We want to get into production, sink our capex, and be able to develop Galan as big as we can to be as resilient as we can. And we know that for the next winter, we'll be prepared and we'll be in cash flow, and we're not going to be a company that is going to be into the red numbers in production. We're going to be generating cash flow and green numbers. So in terms of the story, today we are phase one is 5,200, and that's going to be finalized before the end of the year. We're starting with 4,000 and explained. 21,000 is our phase two. We have the permit, we have got the RIGI, and I think that RIGI is what has leveled us with a competitive position with the Australian miners and anyone around the world. It's a 30 years of physical stability that grants us competitiveness in terms of that we can import our capex without paying import tax, no VAT, and that it's an accelerated depreciation. We have also a clear scheme of getting our money out of Argentina, something that I was asked 8 years ago, how are you going to get this done? So any loans that we can get, and by the way, we have zero debt. We have executed phase one with zero debt. It's all equity, yes. It is painful, yes, but that resilience is showing that we're coming online at the best possible time when no one else is coming online as well. So we believe that we can demonstrate and appreciate our share price by doing what we've done in terms of developing and coming into operation at the right time of the cycle. We were contracyclical. People were calling us idiots, and these are part of risk in that. But at the same time, we were very brave and with the conviction to execute this. And the results are speaking for themselves. So I believe this is just the beginning of Galan. Why? Because we have less than 10% of our reserves today for phase two, which is 800,000 tons of reserves. That's less than 10% of our total resource. So when we look at that, we have reserve for phase two, we believe that we can go to phase three and then phase four. So 60,000 tons per annum into an operation is not a small feat. With the current prices, we'll be printing money. So one step first, 4,000 tons. We want to crawl before we walk, before we run. Can we run? Yes. Give us time and we can demonstrate that. It has taken us 8 years to get to this point. But once it's proven, then the next step, in our view, will be oiled, and then therefore we'll be able to execute in a better way and faster the next things coming up. So this is automatically changing. A picture, satellite pictures where we are. You see POSCO, you see Rio Tinto, and we got Galan. I always said that we were a baby elephant in elephant country. We are one elephant as well. We are one of the top 10 lithium resources by size into development. The Orthium plant is what is making us be one unit with our off-taker. The off-taker has built at their own cost the plant, and it's their responsibility to deliver. But if they don't deliver, they can't get the off-take. So it's a symbiotic force. These guys have worked in Argentina extensively. They work with the old Sentin group. They know what Rincon is. We were taking the very specific part that we changed our chemical filtration that we were doing before with lime to do this with a nanofiltration technology while still using the conventional ponds. So we're trying to get the best of both worlds. The new technology apply into the evaporation pond that we always have, and that will continue to do so. There's enough talk about the lithium market and where the supply and demand is, so I'm just going to skip into this because we all know where things are pointing out that this year will be better and the next year is pointed to be even further. But importantly, I want to recap about Galan. We have one of the top 10 resources in the world in development. We have low cost of operation in that is going to be demonstrated in the next few months. We have a significant uptake into where we're going. And furthermore, we have a resilient company that has demonstrated that for the last 8 years has been able to survive and deliver on our promises to become the next lithium developer. And on a side note, we got Jonathan with us, he's our geologist for Greenbushes. We have in Australia early project resource that we call it Greenbushes South. It's pretty much the same approach that we did at Ombra Muerto. South of the Greenbushes, we believe that the Greenbushes extend to our ground. This is work that we're doing, and any questions, please ask Jonathan. And we are pushing to get the okay to go and explore it. There's a bit more red tape in Australia than we think that we need. We have been able to develop a mine in Argentina all these years, and here in Australia things are a bit slower than we like to, but we are convinced that once we get in there, we're going to be able to demonstrate that there is something potentially important to the south of the Greenbushes mine. So with that, I'll thank you very much. We come online soon. We've been seeing in our production coming up in the chart, and we're very proud to be where we are. So I look forward to next year to be in phase 2. So thank you for that.
Thanks very much, JP. Before I move on to the next speaker, I'll just mention that the first time I came across Galan Lithium was on a plane back from IMARC a couple of years ago when one of their Argentinian team showed me his Galan tattoo. So if you could share with me what you're feeding to the team, I'd be very curious to hear about it. The next speaker this afternoon is Ross Forzati, the Chief Operating Officer of Viridis Mining and Minerals Limited. Ross is a highly regarded rare earths project development specialist with more than 24 years experience delivering major rare earth, battery materials and complex metallurgical projects globally. His experience spans the full project lifestyle from early stage scoping through feasibility, detailed engineering, procurement, construction and commissioning. Ross has played a central leadership role in the Colossus project, having led the scoping study and pre-feas study phases, and brings deep technical and operational familiarity with the project's flowsheet, execution risks, supply chains, and the Brazilian regulatory framework. Ross, if you'd like to step up.
Well, thank you everyone for having me today. I'm here to present the Colossus project, something that I'm very passionate about I've been on the other side of the fence for a long time in the EPCM world, 23 years, and I'd seen a number of rare earth projects come across my desk in that time, and I must say that this one here had so many attractive features. It was too hard an opportunity for me to pass up. So I want you to learn a little bit about Colossus to understand just what a unicorn project this is. So just a quick snapshot of the usual ASX stats. Market cap circa 250, had a good day today, especially when you've got the Serra Verde deal happening overnight, which has definitely spooked the markets. A couple of key people of point here would be Jose Carlos, ex-COO of Serra Verde, VP Linus, and senior member at Solvay. And Marcus Silberman, ex-Credit Suisse and Bank of America. We're building some real bank strength for this project as we move forward. Cash balance is strong. We are fully funded until FID. I'm not sure if everyone's aware of the significance of Brazil, right? Between Brazil and China, they have 71% of the world's reserves of rare earths. So Brazil is going to feature in a big way, right? If we're talking about non-Chinese, Brazil will be there, and you'll see why it'll be there because of the competitive structure that I'm about to present. So Viridis, we are the sole owner of the highest grade ionic clay deposit by reserves outside of China, right? So when I say highest MREO, I'm talking about the magnetic rare earth oxides. They're the only ones that count, right? Neodymium, praseodymium, terbium, dysprosium. They are the ones that make up the basket. They are the ones that are in demand. They are the ones that have become super strategic, okay? We've got low impurities, and our recoveries, as tested at ANSTO, are industry leading. So we're talking about a 76 to 78% recovery, right? From our run of mine through to our mixed rare earth carbonate product, okay? So where are we? We are in Minas Gerais, near Bosos de Caldas. I mentioned the grades, they're amazing. But what we also have in this jurisdiction is the things that I think make it difficult for, look at Kwinana, for instance, for them to compete because of the cost structures that are in place. In Brazil, the labour cost is significantly cheaper, right? We're talking about Western Australia paying $150,000 for a truck driver. We're paying $15,000 US per year, right? There's a huge difference. We've got access to water. We're in a mining jurisdiction already. We've got Alcoa that borders. We've got CBMM that borders. So there's plenty of skilled labour in the vicinity. Bosos de Caldas itself is 180,000 people, okay? So it's very attractive in that sense. And we've got hydroelectric power, right? Very cheap. Our resource is 493 million tonnes, right? 2,500 trio. Now, a lot of projects talk about trio, okay? And I saw this all the time with my projects when I was on the EPCM side. Trio can mean nothing because, as Alan talked about before, that could contain cerium. Cerium is worthless, right? These are low-value parts of the basket. What counts is the magnetics, and that's what we're abundant in, and that's what makes us different, okay? We've only drilled 12%. So 12% of our 235 square kilometre land holding, okay? So our project basis is a 20-year life of mine, initially, but we're talking multi-generational. That's why this is so significant. Now, this is quite a powerful graph, and I talked about how we have a reserve of 200 tonnes, which is the largest ionic clay reserve outside of China. But what we're doing here is a very targeted mining strategy. What you see on the right there is our grades, and the red areas are our targeted high-grade areas, right? So we're intending to feed 1,000 ppm of our magnetic materials, right, for 20 years with a 5 million tonne per annum facility, okay? So very significant. The red areas are the pits. We're going to basically put our processing plant in the middle of those pits, so very closely located. We're talking haul distances of 1 to 2 kilometres, okay? So very small distance. Now, and because of that, you know, the short haul distance, that helps keep our OPEX very competitive, all right? But I think what's important here is if you look at this graph, so at 1,000 ppm, which is our purple bubble, okay, with 100 tonnes, which gives us our 20 years, you can see where our peers are in terms of grade and tonnage. And we also know our recoveries are industry leading. So if you look at a Serra Verde, for instance, you've got 1/5 the grade. You've got half the recovery. Now think about that in economic terms. It's a 10 times, right? This is what makes the Colossus project unique. This was what makes us very different, extremely competitive. The only other peer like us is in the same region, in the caldera, right? We're talking about a volcanic area, an old volcano, where basically all of the rare earths are concentrated into the regolith phase. We're talking a shallow dig operation. And I'll move on to the next slide. Sorry about that. This one here gives you a bit of an overview of our flow sheet. So I mentioned it's a shallow dig operation, free dig. It's truck and haul. There's no blasting. We use those trucks, we deliver it to an ore scrubbering operation where we hit it with water. We screen out, we feed our plant the 600 micron and under material, okay? And we screen the oversize out. We pump it across to our first stage, right, which is our leaching operation, okay? So there we use, because it's an ionic clay, and we're not talking about a hard rock, we're not having to break, you know, these really tight crystal lattices. This is where the rare earths are so weakly adsorbed to the clay, all we have to do is substitute with basic ammonium sulfate fertiliser, right, at atmospheric conditions and at low pH, and we are able to make our PLS, our rich liquor stream with the rare earths, okay? So that's at pH 5, and obviously we're moving 5 million tonnes per annum of dirt, right, to pull out a smidgen of the rare earths. So what are we left with? A whole lot of clay, which is our residue. So we do a solids liquid separation process and a lot of washing. So it's distinct from the Chinese. What we're doing is things in agitated tanks. We're doing it with credentials, right? ESG credentials. We're not throwing chemicals into the ground. We're not washing the ground. It's all above grade in tanks, okay? Atmospheric conditions, atmospheric temperature. So the CCD circuit and the filtration step is a big deal for us. We put a lot of attention, a lot of focus into that. The residue is going to be returned to the pits. Initially, we'll have a storage facility, which is just a pad, okay? And then we're only intending to have one mine open at a time, okay? So as soon as we've finished with one mine, we're going to obviously backfill the residue, right, into that pit. But it's important that we wash the clay of any of the chemicals to hit the limits that we're designing to, right? So we spent a lot of time on that CCD circuit. We then take the PLS and we do an impurity removal step. Now, you can imagine Alcoa doing a lot of mining in the vicinity. One of the impurities for us is actually the aluminium. So we use that, we knock that out with ammonium bicarb. That's at pH 5.5. The next step from there is to do the actual MREC, mixed rare earth carbonate precipitation, right? We do that at pH 7.1. We filter, we bag it, and voila, that's our final product. Such a simple flow sheet. One of the simplest that I've come across, right? You know, I've spent a lot of time with those hard rock flow sheets where you've got to hit it with temperature, you've got to hit it with a lot of chemicals, a lot of tricky unit operations, right? We're in Brazil. Yes, it's a skilled workforce, but I tell you now, this is going to be a simple process to operate. Our biggest challenge will be our solids liquid separation, right? It won't be the recovery of the mixed rare earth carbonate. Okay. The other big feature of our plant is the water recycling. So we'll stick it through a nanofiltration and ultrafiltration circuit to recover the clean water. We recover all of the water, and then we also recover the reagent, right? So we regenerate the ammonium sulfate. Because we produce the bicarb, the ammonium bicarb, hit it with acid, and we've got our ammonium sulfate. Okay. The other feature of an ionic clay project relative to the hard rocks is the capital intensity, right? We're talking about circa 360 to 400 million US capex, right? We're not into the billions. This is a palatable size plant where 3,518 tonnes per annum of the magnetic rare earth oxides are produced. Just for context, that's 5% of global demand, right? And in that, we've got 150 tonnes per annum of the heavies, which is the DYTB. Our OPEX is, our C1 OPEX is only $6.20 per kilogram of trio, okay? So what's interesting is all of this talk about floor prices and the like. You know, we hear about the MP materials, we hear about the Lynas getting the $110 per kilo NdPr basis, right? That's been in the news. That's why there's been this, you know, spike and spruik in some of these share prices. But I know the economics of our project. This is why I'm here. This is why we've got a very focused team delivering this project. Free cash flow for us on the back of a $90 per kilogram NdPr pricing is 300 million Aussie per year, okay? That's at $90. When we did the PFS, we used $60. We still had 150 free cash flow. So we are competitive right down at the bottom on the pricing basis. We are super competitive at the top, obviously. But we are more competitive than the Chinese. We've got, you can see the Project Blue data set here, where that blue line, and this is all benchmark data from Project Blue, that blue line is us. That just shows you the cost profile that we're talking about here, right? So the economics are unmatched, okay? Just a little bit about the funding. I said we're fully funded with our strong cash position. We are the only rare earth project globally which has been selected by Vale and BNDES to be part of the Brazilian Strategic Minerals Fund, which is a US $5 billion fund. So that fund is being deployed by OR and Regia. Okay. Now they did 3 months of due diligence over us before making that step. So that gives us access to $30 million in US in non-brokered private share placement. Okay. Our debt stack is based on Global Export Credit Agency. So we have Australia, EFA, which is 50 million US, EDC Canada, 100 million, and BPI France, 140 million. So you can see our equity stake required is circa 70 million. So we're not chasing significant equity, which is good for our shareholders. Okay. Something I'm passionate about is our demonstration plant. We've just constructed this. Can't share the photos just yet, but we're commissioning and we're looking to produce product in Q2. This is 100 kilograms per hour feed rate, okay? This is the largest mixed rare earth carbonate demonstration plant outside of China. We're testing the full flow sheet. This is offtake samples, design criteria, scale-up validation. We're going to use it long-term to train our workforce, okay? Because obviously we've got the Brazilian team there at the moment. There's 60 of them. We're ramping that up, obviously, as the project advances. But we want to bring them through and along the journey so that we've got that skilled team very specifically focused on our process and our flow sheet. Just a little bit about the approvals process. The biggest single approval step that we received was on the 19th of December, where we received the preliminary licence, which is essentially the EIA. Okay, so significant de-risk for us, strong message to the market that we're moving. Right now, we're busy with all the paperwork for the installation licence. That's happening, submission is the end of this month. So we're timing the approval with the authorities, FIEM, for September this year, which aligns with our FID. So we are being very aggressive, but the timeline of 6 months for the approval step with the Brazilian bodies is benchmarked, and we're quite confident. Following that, there'll be the operating licence, but the operating licence is just the last step. That's when you've got your constructed plant and you've got all your controls in place. The Brazil system is very structured when it comes to the approval steps. It's a big positive, which we can talk about in the panel. Just quickly, and it's very important to Brazil to know that we have downstream technology through our JV partner, which is Ionic Rare Earths. I mentioned Tim Harrison. I didn't mention actually. Tim Harrison is also on our board as a NED. So the JV is called Viridis. It allows us to take and separate individual rare earth oxides. And we've actually demonstrated that with the recycling and processing of end-of-life magnets that we got from MRI machines and wind turbines. So you can see my CEO boss there with a bag of separated oxides for CIT Senai. So that was a big milestone for us. Lastly, just in terms of the pathway, so we're ticking the boxes. The demo plant March, we've tendered the EPCM, and we expect the tenders in on late May. We're aiming to release a limited notice to proceed for that EPCM in July, August. We're going to place orders for long leads in July on an LNTP. And then, of course, we talked about the installation licence and FID timing for September. So the team that's been brought on for the project is all about delivering the project. There's no mining the market here. We are moving. This is very real. We're taking it very seriously. The demo plant is that critical step to showcase, and there'll be plenty of news coming out in the near future for that. And so, yeah, overall, just an exciting prospect. Super excited to be part of it, and hopefully everyone can remember the word Colossus and Viridis for the future. Thank you.
Well, thanks very much, Ross. That was very interesting. And that concludes the individual presentations for the afternoon. So I will now hand over to Michael Washbourne from Paydirt and invite back to the stage JP Vargas de la Vega and Will Dix, and I'm going to join the team on a panel.
Well, thank you very much, ladies and gentlemen, for joining us for this final session for day one of Paydirt's Critical Battery Minerals Conference. obviously we've just heard some great presentations on various parts of Latin America and a couple of different commodities at various stages of development as well. So yeah, this particular session is titled Three to Tango, Australia's Place in the New Latin America. So, you know, we've got obviously a great bunch of, I guess, experts from the region to have a discussion with that. But I'm actually going to throw to Elliot Luke from Clifford Chance to sort of start off with. You know, I guess, you know, for those in the room that are obviously familiar with Latin America, you know, we've seen a bit of a return to the right in quite a few of the key jurisdictions in particular over there in Latin America or South America, depending which way you want to look at it. Can you tell us a little about what that is saying about where the continent might be heading and to an extent what role critical minerals might be playing in that narrative?
Thanks, Michael. Yeah, I think that's right. We are seeing a swing to the political right across much of Latin America. I think one thing that's important to understand, and many people in the room probably already do, but is that Latin America has a tendency, very generally speaking, to swing right to left, right to left. And we're definitely on the right-hand side of the swing at the moment. We've got a new government in Chile. On the right, we've got the famous Javier Milei in Argentina, who has promised, you know, neoliberal reform, opening up, cutting red tape. And I think this is a trend that we're seeing across the region. Peru is having elections at the moment. It looks as though a right-wing government is going to come in probably in May. The same has happened elsewhere. Ecuador, Bolivia's actually sort of going that way as well, which is quite a departure from where it's been. As to the degree to which it's being driven by critical minerals, I certainly think it's a factor. As I said, I think there is a natural tendency to swing from one side to the other, and fairly wildly it can be in Latin America over time. But I think what's happening at the moment, we've moved from you know, the energy transition, which is still in full effect, but now there are concerns about energy security, critical mineral supply chains, and the role of Latin America in the geopolitics, I think, is pushing the politics to the right. You know, Trump is certainly having his influence across Latin America as well. US capital is flowing into Latin America. So I do think it is driving that tendency. What will be interesting to watch is, you know, in 5 years' time, will it swing back the other way? But maybe we'll discuss that in 5 years.
Yeah, well, it's definitely, and you mentioned obviously Peru there, where we're all sort of watching with interest as to sort of how long it'll be before the new government or potentially a new government is formed. But JP, perhaps if I can now turn to you, and I'll lean on you not just for your experience operating in Argentina in the last 8 years, but also your background in Chilean heritage. You know, sort of, what are you sort of seeing, you know, from someone who's, I guess, got interests on both sides of the coin there in terms of this little political shift to the right?
Okay, I'll start with Chile. Since democracy came in 1990, Chile's been pretty much on a center-left path, except for the Piñera era that was a bit more to the right. Lately, the last government that we had in Chile was far left, and as a reflection, there was hardly any investment in Chile. I guess there was a big swing back to the right because people could see that things were not happening. You know, a lot of promising and not much of delivering. Look, as a Chilean, I've seen Chile becoming a strong economy since I grew up there, and things changed in the 90s. And also I've seen when things swing too much to the left, like on the last far left government that we had, things didn't happen. You know, so the country started being a bit more disorganized, I guess. And I think that the change to the right with CAS now it can give a platform for Chile to be the organized government that we used to see from the center left. That didn't change much, by the way, during 15 years. It was like pretty much, as was mentioned earlier on, swing to the left and right. But in Chile, that swing, you couldn't barely tell. Why? Because we have an independent central bank. We had a government that was completely open to the import-export, similar to Australia. So he saw a country that was very strong into the macroeconomic and open economy. So where you see in Latin America, the central bank going anywhere. And I think that was what cemented Chile being to what it was. And I'm very pleased to see that there is a new level of organization in Chile. And then moving to Argentina, that it's new to me in the last 8 years, and I grew up here in Argentina. It's a dog's breakfast. But an economy that's very resilient at the same time because it got plenty of resources. You know, like it's easy to get food on the table, and there's a lot of opportunities to develop in the country. But I think that what I've seen the last few governments in the last 8 years, and as a reflection of the read that we just got with Milei, I think that we've seen a change by the people of Argentina wanting a change. And the mid-elections were favorable to Milei again. There was a big question mark if that was the case, but it was a full endorsement, and actually the party grew. My take is potentially he could be re-elected, and if that's the case, then you have 8 strong years of one way of doing things, and I think that will be good for the Argentine economy. Yes, it's not perfect. Yes, I think they can be done better, but overall pluses and minuses. I think that the swings are healthy, by the way. You know, you cannot be just in one corner and not develop it. But in that southern part of the continent that I've been exposed to, I've seen that the current changes could provide a better platform for investment. Essentially, the current government is seeking $100 billion of current red tape for investment. And I think that's positive because at the end of the day, it's going to bring wealth to the country.
Fantastic. All right. Will, I'll turn to you. Obviously, as you mentioned, you've come back, obviously, to Latin America after a period sort of working here closer to home in Australia. I'd imagine, following on from what JP said there, that Argentina would be a very different place to what you remember from when you last operated on the continent.
Yeah, well, I haven't been in Argentina before. This is my first foray there, but JP touched on the rigging initiative that's in the government's brought in his talk, and certainly that was something that was mentioned to me before we got involved, and we're at the very, very early stage. But if we are successful, they're the kind of things that the government's put in place recently to attract investment, and that's a huge positive. Previously, I've done a bit of work in Brazil and then further north in Mexico, and so far, Argentina seems a pretty good place to operate in the current environment. And yes, things do change, but where we are in San Juan, BHP up the road at Filo del Sol are investing huge amounts of money with Lundin, and you drive into San Juan now and there's drilling companies there, there's a new university that's got a geology school and a mining engineering school, and it's a really changing place. And the local workforce that we have is so enthused about the opportunities that they're getting, and the breadth of opportunities is not just with Belararox, it's with big companies, and it's with Barrick, and it's with all of these global leaders. So San Juan and the province itself is really feels like it's going places.
Yeah, for sure. All right. And Ross, we shouldn't forget about Brazil here, and there's probably an argument to say that Brazil's maybe been the leader of all the Latin American countries when it's come to mine developments and all these sorts of things. Are you seeing that reflected in how you're progressing the Colossus project with Viridis?
Yeah, absolutely. The thing that I see right now is a lot of companies that start out, it's all about the exploration upside, right? But I think now with the recognition that it's of such strategic importance, we are definitely getting that support, whether it's investment in us, whether it's through tax incentives, all of those initiatives, the $5 billion government support package with BNDES, these are all driving, a whole wave of new development. The rare earth sector is certainly probably the hot topic in Brazil right now. It helps that we've got strong Australian ties with Brazil, and plenty of examples and precedent for companies that have been there, done that. The fact that Alcoa is nearby, CBMM, it's all strong. Yeah.
What was it you said before? It was 71% between Brazil and China, which is, I don't think there'd be too many people in the room would have been familiar with
that
right.
particular statistic. Elliot, if I can come back to you and touching on Ross's point about obviously the Australian expertise in country there, it's interesting. Have Australians always been sort of the partner of choice, and are they still the partner of choice for companies that and countries operating in Latin America?
It's an interesting question. I think the short answer, unfortunately, is no. They haven't been. I think I've been working in Latin America in various different roles for about 20 years, and historically, the Canadians, it's been their backyard. So I think, the TSX was a very sophisticated market. There was a lot of money coming in through the TSX into Canadian juniors and mid-cap mining companies in Latin America, and it was pretty much, my theory has always been it's because of familiarity and because of proximity. It really is their backyard. I do think that's changing slowly. What we're seeing at the moment, or what seems to have shifted, is twofold. One is there's this flight of capital from the TSX to the ASX, which is making a difference. But also the Australian juniors are there in greater numbers, I think, than they have been before, possibly bolstered by some of the majors, the successes that the Rios and the BHPs are having in Latin America. So I think things are changing. What is exciting for me as a Latinophile, I guess you could call me, is the opportunity that is there across Latin America. It's not always an easy operating environment. The politics can swing, as I said before. There are challenges to that sort of operating environment, but the political winds are blowing in the right direction at the moment, both sort of within each of the Latin American jurisdictions, but also in geopolitical terms. And I think Australian mining companies are really well placed to take advantage of that. They have the capital, they have the expertise. It might also be that historically, Perth is on the wrong side of the country for Latin America, and that's why everyone in West Perth's gone to Africa. Well, I think that is beginning to shift.
Yeah, for sure. Well, JP, I was going to ask you a question, perhaps, so if you hold that thought. Argentina's lithium sector, has become one of the biggest in the world, and there could be an argument that Australia played a large part in its development through the early days with the Orocobres and Galaxies and the like. Is that feeling translate on the ground that Australians were responsible for what we see? That's I guess now Rio controlling a large part of that production.
I would say the answer is yes. Orocobre was a spearhead to lithium from Australia. And I'd like to clarify that in Argentina, it depends where you are in Argentina, is how friendly they are into the mining jurisdiction. But I've seen a change as well in that. I had the privilege to be in New York in early March, and I took a picture with Milei and Caputo, number 2, of the government. That was quite a proud moment. Then, I was welcomed to that ceremony. But whilst the federal government was pushing this, you had around 10 governors from different provinces in Argentina, and some of them were not from the same party. So it was a bipartisan and a common view that Argentina needs to change, and that needs to change for the better, and if they do things together. And the RIGI actually is a bipartisan legislation that got approved. So I see that there is a consequential act from within Argentina, and that's reflected on the elections that I mentioned early on, that Milei got strong support. So Argentina is changing into that. Are the Australians recognized for the spearhead work that is being done in the lithium sector? The answer is yes. I think that that stays in the memory, and even though this is 2015, at a time that Argentina wasn't that friendly to mining, and as I exposed BHP, the Rio, the POSCOs, I call it the United Colors of lithium, because you pretty much have different part of the world represented in lithium in Argentina, and Australia has a place, and a strong place in all of this. And there's still in the collective memory, and as a result, that in a way helped me to set up Galan for the association with Australian companies in the sector.
For
sure. Ross, can I perhaps sort of put a similar question to you? You know, we've got Brazil and this fledgling rare earth sector over there, and Australians have been at the forefront, particularly through this exploration phase. Is it seen as a good thing that there are many Australian companies sort of sifting through Brazil, looking for rare earths and perhaps some of these other niche metals like niobium?
Yeah, I mean, niobium's got a long history, obviously. Obviously, rare earths is a fairly new sector for them, right? And yes, it is. For us, I kind of see the likes of one of our peers, Meteoric, as being a bit of a trailblazer in terms of first mover advantage. Being probably a few months ahead of us, and to have someone that's an Australian listed company in the same sort of pathway as us, and to be working alongside companies that are sort of on the same mission statement with similar production and the like really does help. Like I said, the little ecosystem that's building between the regulators and the finance side of things is pretty well established. The regulatory pathway that we need to take for the project that's been tried by other Australian companies is fairly well known. It's very rigid, very structured, so that helps. So yeah, I think the fact that in other commodities that other Australian companies have had the opportunity and have built projects there is great precedent. But in the rare earth space, it's obviously fairly new, and there's some untried and untested waters. So we've still got to be careful, and we're making sure that we're doing everything with the right ESG credentials, following the regulatory framework to the T. And yeah, that's pretty much it.
Fantastic. No, thanks, Ross. And Will, perhaps if I can come back to you as well, you're at a different stage of the development, almost, I guess, pre-development, sort of still proving up resources and all that sort of stuff. Obviously, when you come in at that stage, you've got to set certain expectations for the country that you're operating in. What are the sort of things that Belararox is doing to really, I guess, lay the foundations for what you hope to become in Argentina one day?
Yeah, it's a good question. We're in two very, very, very different jurisdictions, but what we've tried to do from day one, or certainly my research of what's gone on before I was there, is engage very directly and very quickly with all the local communities. And I think that happens everywhere now. I mean, companies don't just go into areas and run roughshod over them like they used to. So, for instance, when I was in Argentina in the middle of March, the first thing we did when I got to site with Chris is we went to the local government. We met with the local government. Chris, speaks 5 languages, so I sort of sat there with my AirPods in, translating automatically in my ears, and let him run the meeting. And basically, the questions we ask are, what do you need from us? What are we doing right? What can we do better? And I think if you go in with that attitude that we're never going to get this perfect from day one when you go in there, but we want to make sure that we're doing things the way the local community expects us to, and you set that benchmark early. And their feedback to us was, we want to see jobs. We want to see jobs created. If you're working in our province, in our sub-province, please employ our people when you can. And that's the same in Botswana, and it's the same in regional Australia often. So we've done that. We've gone in, and our workforce on site in Argentina, including contractors, is around 50 to 55 when we're drilling with 2 rigs. And of those guys, there's probably 15 that come from Rodeo, which is the closest significant town in the San Juan province. Rodeo is famous, by the way, because it's having the World Kite Surfing Championships there this year on a man-made lake, which is a reflection of how windy it gets up there. But we've got 15 local guys there. A couple of them come from sort of settlements that are a little bit more remote, but and the local government says, well, it's fantastic, that's what they want to see. So we've also got a warehouse in Rodeo now, so we're contributing back into the local economy by that, and that's where all of our core gets stored. And segueing to Africa, Botswana's the same. The first thing I did when I got there is a bunch of community meetings, and you've just got to engage. That's the key. Engage and be honest. Don't tell them you're going to employ them if you're not. I hate that.
Sure. All right, thanks, Will. We'll switch our attention now to sort of, I guess, the legislation side of things, and particularly that pertaining to critical minerals in the Latin American continent. Elliot, I guess, can you tell us a little bit about, I guess, some of the new legislation that's perhaps emerged in recent years in certain countries, and I guess how that's really facilitating the development of these, critical minerals projects that the gentlemen on your left and right are developing?
Yeah, thanks, Michael. I'm not going to sit here and bore everyone to tears by talking about Section A, B, C of the mining law of Cuba, but in broad strokes, I think it's fair to say that Latin America has fairly robust mining legislation, at least compared to a lot of parts of Africa where I also do work. There is a fairly, Ross was describing it earlier, in Brazil, there's a fairly structured approach in most jurisdictions to obtaining mining licenses and exactly what you have to do. And those frameworks are being, I would say at the moment, enhanced by this interest in critical minerals, and Argentina is probably the best example of that, where the whole RIGI framework, which isn't mining specific, by the way, it applies to large-scale investment across the board, but it is designed to incentivize long-term, large-scale foreign investment into it might be energy and infrastructure, but certainly mining projects as well. Then you have, there is a deregulation side in many respects that is happening as well. Argentina, again, good example, where Milei has recently amended the glacier law. Now, it's very controversial, but he is essentially allowing for oil and gas exploration and mining exploration to take place in areas previously protected under glacier legislation. And I think that sort of those sorts of moves you're seeing more and more across the continent. The issue that I see, and this is where I guess bring in my own practice and practical experience a little bit. The issue is that some of that deregulation can be really quite controversial in the medium to long term. And so where a foreign investor has gone in and relied on, let's say, the relaxing of environmental protections around the glacier and has put money into projects and has identified a resource, the next government might come along and actually shut that down. So the good news is that Australian companies, Australian investors in Latin America, mining investors or any sorts of investors, actually have a broad range of international law protections that the Australian government has signed up for together with Latin American governments to protect against some of those shockwaves that can result from the swing from left to right or the shutting down of particular pathways to development that previously existed. And what I'm talking about here are investment treaties. Anyone who knows me well will know that I spend far too much time talking about investment treaties, but they essentially protect Australian investors in particular Latin American jurisdictions. I'll go back to Argentina. There is a bilateral investment treaty between Australia and Argentina. That provides that Australian investors in Argentina will be compensated if there is an expropriation, will be compensated if they are discriminated against, will be compensated if they are unable ultimately to repatriate their capital. And similar protections exist in jurisdictions like Chile, Peru, I think Mexico. I think that's probably it. Now, the good news is that if you're going into another jurisdiction, there are other ways around it. There are ways that you can either negotiate similar protections into a contract, or you can structure your investment through a third country to obtain those investment protections. And they're really valuable. Why are they valuable? First of all, they provide you with recourse to international arbitration and to gain compensation if there are regulatory changes that affect the viability of the project down the track. Second of all, they're super attractive to financiers. And there are actually studies out there that show that mining finance becomes cheaper if you have access to these protections. The very bad news, I'm afraid, for you, Ross, is that none of these protections exist at all in Brazil, which is completely opted out of this whole area. But I think it's important to realize that, yes, legislation is changing across Latin America, but Australian investors are able to access these mechanisms that sort of I guess, shield them to some extent from some of the changes that can take place over time.
Yeah, excellent. Well, I'll come to the Argentina guys in a second, but just Ross, just quickly, are there any, obviously you mentioned that there's not that sort of level of protection in there, but are there any incentives in Brazil at the moment that are sort of facilitating specifically rare earths, or as I said, those other sort of niche critical minerals?
Well, I mentioned the Vale and BNDES critical minerals fund, and we're talking 5 billion Brazil real. So the fact that via Ore and Regio, we were the only rare earth project globally to receive that support, that's a big tick for us. Gives us confidence that we've got the right backing in country from whichever government comes forward. But I think, as much as we believe in our project, I think the Brazilians want to make sure that we're there for the long term, and we're looking at not just being an MREC producer. They want to be part of the value chain, right? So they want downstream technologies. So they are moving towards that direction. That's what they want. That's why that recycling of the magnets is such a big deal, right? So yeah, pretty confident in the fact that there's plenty of government support, and obviously that vehicle of $5 billion and getting access to that $30 million US for us, personally, is significant. So yeah.
Fantastic. Thanks, Ross. Well, JP, Ross is obviously going through the funding process at the moment, and you've just completed it sort of at the start of this year for your phase 1 production. Can you tell us a bit about, I guess, who's interested in funding a critical minerals project in Latin America, or specifically Argentina, but also, what involvement does the government have in that funding process? So are they, like we've seen in some places around the world, after a bit of a slice of the pie of the production that you will put from Hombre Muerto West?
Well, the short answer is no. The Argentine government, neither the provincial government, has indicated any interest in being part of Galan. Can they provide funding? Probably not. Argentina is going through a restructure. They're trying to cost saving, so they actually stopped funding the provinces on infrastructure. They said to the province, you have to self-fund yourself. So the message that we get at the provincial level is, as mentioned earlier on, is jobs, and more jobs, and take the local force. There's a mandate in at the province of Catamarca where we are, and they require 70% of the people that work at Galan in Argentina to be from Catamarca and their operations. From that, approximately 2/3 of that 70% have to be very close by and trying to take as many as from the local communities as possible and trying to develop them down the track. And they've seen these changes and they see how the proximity we're working with them. So there's not much of a pressure for the government to be part of this. The only thing that we have agreed, and this public information, is that as we start pushing on the opposite side, not add as much value, we want to sell concentrate, and that's our product. And for such, we agree on paying the equivalence of the royalties that get paid for concentrate in Australia. So, which is a little bit higher than currently is. Therefore, we compensate the lack of added value with paying cash to the government. So, we have a bit of resistance at the initial when we started, but then they came down to the numbers speak for themselves. We cannot compete with China to produce carbonate. And the operations in Argentina, they're a bit more expensive to produce carbonate than the Chinese. So therefore, they can see that potentially can give even more royalties from our high-end output than competing with China. Therefore, it's no different to Australia, by the way. We're seeing with all the lithium producers, everyone here is producing concentrate and trying to put downstream processing into this. It's really difficult and expensive. Even though the Catamarca government leans to the left, we haven't seen any intention through all the time that we've been there wanting to be part of Galan. Neither the federal government, on the contrary, they've been trying to push for us to be independent, to run ourselves. The RIGI is supportive piece of legislation that we are enjoying it. And just touching on that, in Chile, it's the same thing. The Chilean government is not getting involved in owning anything for a third party in copper and lithium in any part of the private sector.
Fantastic. And Will, just quickly to you, obviously, as we mentioned before, you're in that pre-development sort of stage, but with the things like the Riggy Bill in place, how early can you potentially access the benefits of that? Is it still too early in the piece, or is that something that you ultimately look to factor into your forward plans?
Yeah, it's too early at the moment. I think the number's something like, and JP might be able to correct me, US $200 million and above. You have to be in that sort of scale.
That's
so we have aspirations, obviously, to get there. But one of the things that, and I might digress a tiny bit, but one of the things that we're finding, talking to people generally about Argentina and political will and the want to grow the mining sector, is if you look at the comparison between Chile and Brazil in terms of, Chile and Argentina, about what's exported on the mineral side of it. I think last year or the year before, it was something like $3.9 billion came out of Argentina, and there was about 60 billion out of Chile. So, that they share a border down the middle of the Andes, it's as prospective in the Argentinian side as it is on the Chilean side. And Argentina feels like they're playing catch up. So the incentives are there for exploration companies to go in and be part of a real drive to grow that export side. And the reason we're in Argentina is partly because the opportunity is so good from an exploration point of view, but the encouragement from having the Barricks and the BHPs and all of the big Canadian companies around us, it's, the system's there and it works, and the government's supportive. So, BHP were out of Argentina until July 2024. And the only reason I'm sure that they came in was the confidence they got from the Argentinian government that this is long-term and we're going to back you and we're going to back this development. So it's a really, really good place to be at the moment.
Fantastic. Thanks, Will. All right. I think it's time to probably open the question up to anyone from the floor. We've got a roving mic around. If anyone's got a question they would like to put to any member of our panel.
Thank you, Francis. Thank you, Michael. This is to anybody who would wish to take it. Australia's diplomatic presence in the Latin American region isn't strong compared with other countries, and we're seeing, it was alluded to a couple of times, the likes of the US and China for that matter, and other countries making big geopolitical plays in the region around critical minerals. I think specifically about the US's intentions around Venezuela, potentially Bolivia as well. Is there a danger that Australian junior companies like yourselves are going to miss out because we don't have the same geopolitical weight to fall back on that maybe competitors from Canada or from the US or elsewhere can rely upon?
I'm just going to go back to, I'll be selfish here and say it goes back to the project's fundamentals. For us, the grades tell the story. The simplicity of the operation tells the story. So, look, my CEO's not here, so I can say we're in deep discussions from an offtake perspective, right, in terms of different jurisdictions. And I can say that includes the US, the Europeans, the Koreans. The level of interest when countries are trying to shore up their supply of such strategic metals and minerals is the driver. And when they know that you've got the economics and they stack up, when they know you've got the grades, and when they know you're in the right jurisdiction where there's precedent, I don't think we need to worry about what the Australian government is doing.
Yeah, I agree. I think good projects will always find a way. That's what you guys have got.
I think it's interesting to watch what's actually been happening, and it's not necessarily been prompted by the Australian government per se, but if you look at a company like AVZ Minerals, which has got itself into all sorts of strife in the DRC and in Africa, Trump was personally encouraging AVZ, I was reading the other day, to actually divest its stake in the Monono lithium project to Cobalt Metals, which is, the Bezos-backed explorer from the US. And I think, regardless of what the Australian government may or may not be doing, the project fundamentals are there, but not only that, but the actual expertise is globally recognised, and the experience and understanding, particularly of Australian junior mining companies, is recognised in the US in particular. And I think that stands Australian miners in very good stead.
Yeah. Well, Elliot, just as a slight extension of Dom's question there, obviously mentioned about the heavyweight nature of the US and China, and obviously there are other major economies that invest around the world. But I guess for Australian companies operating in Latin America or maybe Africa as well, is that a challenge, or is there actually an opportunity there to do something a bit different and perhaps make something work that might not otherwise have had a straightforward path?
I think if you look at what's happening in Latin America, a lot of the mining focused jurisdictions are dancing a delicate line between the US and China, and I think that's something that Australian mining companies could and probably should do as well. There is definitely opportunity there. We have however many, a significant number of ASX listed mining companies that have major shareholders in the form of Chinese companies. At the same time, there is a lot of US capital which is flowing into Latin America, as $1 billion recently has gone in. I think there is opportunity there. I think it would behoove Australian mining companies to go in with their eyes open and to try and play that political game very delicately rather than picking a side. Whether or not that ultimately ends up being possible is anyone's guess. I can imagine that there might be, the long arm of the US Department of State might come and slap them around a little bit if they play too coy, but yeah, I see it as definite opportunity, because you've got two competing superpowers trying to secure the critical minerals, and you've got the capital and the expertise concentrated here that's being deployed overseas. That it can only be opportunity.
Sure, excellent. Sorry, JP?
I'd just like to add that in lithium specifically, the elephant in the room is China. 90% of the lithium gets processed there. And the West is trying to catch up, but it's almost the lithium industry in Europe is very small, almost non-existent. It is in development. In the US, it's almost the same thing. Japan lost its position to process battery. The whole thing started there. They lost it. Korea is fighting back in a way, but for us, we're talking to everyone. We want to make what's best for shareholders and try to deliver the best value. But it's definitely a strong Chinese interest when the capacity is there. So we cannot ignore that. But I would like to also be able to take funding from governments, because they are softer, and therefore we can have better payability back into what we're getting. But we've seen this for the last, it's not new. This is something that we've been experiencing in lithium for a long time, and it's changing as well. I remember being 4 years ago in Europe, and no one wanted to talk to us. Why? Because our end product was not hydroxide. Now the whole thing has changed and flipped. Carbonate, since everyone sleeps, and we're not producing carbonate, and people look at us, well, the only company doing carbonate, so concentrate, liquid concentrate. But our aim is to develop this in a way that we can get the best value, because at the end of the day, who's our end user? Where is it going to go? And if you add another 5-10 years, that's, in my take, it's solid-state batteries that requires lithium metal. Now, who's producing lithium metal today? 2 countries, China and a small quantity in the US. So this whole thing can flip once again, and where the funding and when you lock in your capital is relevant. And the governments play a strong part in this. But it's this geopolitical changes that it is sometimes a bit difficult, but it's the nature of mining in modern age.
Absolutely. All right, fantastic. Well, thanks, JP. Do we have any more questions from the floor? Yes, just one down here, thank you.
My question really regards to rare earths in Brazil. As I can see it, that there's Brazil is a major member of the BRICS consortium, and also there's a desire for some nationalism in trying to process your rare earths within Brazil. Is that going to restrict exports of your type of product because the United States is wanting to do the same thing, and there may be a clash?
I would say no, because I can tell you now that the US and Brazil cooperate in a big way. And we're seeing that. We just went to the US Brazil Critical Metals Forum. Discussions are very free-flowing. There's not even any mention of any nationalisation risk. So we're not even flagging that as any sort of risk. The benefit of the project, like I said, for us is we know what we can produce. We know we can get there quickly. We know we've got the process and the flow sheet to get there quickly. And so, you know, that's attractive. That's attractive for Brazil, right? If you've got Alcoa nearby, if they're looking to ramp down soon, then we know where the next operation to get up in the vicinity. That's a big deal for Brazil, right?
And thank you. All right. Do we probably have time for one more question? Simon down the front. Does the microphone coming your way, mate?
This is a bit outside my pay grade, so with some trepidation. So USA Rare Earths buys Serra Verde for $2.8 billion. Serra Verde, as I understand it, is owned by some pretty astute international investors. $2.8 billion is a lot of money. And I think, Ross, you had Serra Verde listed on one of your slides, slightly down below where you are. My question is this. Last year I was involved with Less Common Metals, who were bought by USA Rare Earths, matter of public records, private company, 200 million US, 100 million in cash, 100 million in shares. Some very happy shareholders completed that transaction in November. My thought is, you know, looking at your futures, the three companies, is a USA Rare Earths acquisition likely to generate more value for your shareholders than going it alone? I mean, it just seems to me that there's a kind of aggregation of value once you get a supply chain underway with the mines, the processors, et cetera, down to magnets in a rare earth thing. That, in other words, the sum of the total is way beyond the sum of the individual parts. Does that ring a bell?
Yeah, it does. Look, there's a lot of focus on the whole value chain, that's for sure, right? And obviously, we're a big part of that because we're feedstock to the next inline, which is the likes of a Solvay or a Caresta and the like. So, you know, when we're talking offtake discussions, these are the key players we're talking to. It's, you know, $2.8 billion for Serra Verde is a huge chunk of change, right? Say again? It's done wonders for your share. Well, I think it probably has today, but, you know, to me that's just noise because I know the full story of where we're going. This little blip here is nothing. It is nothing. And, you know, like I said, I put the Serra Verde stats up there because it's real. Their grades are a fifth of ours. Their recovery is half of ours. Now, when you do the maths on that, the economics just don't stack up, relative terms. But this is where decisions get made, people invest. One of the things I find so frustrating, not talking in Brazil now, I'm talking more in Australia, is, you know, I saw a lot of these hard rock projects come across my desk in time, and we're talking about some seriously big investments here, $2+ billion, very complex flow sheets, and we see governments that just back and throw money at them, and it worries me. It really does, because these are flow sheets that are going to have a ramp-up time. You look at Linus. How long did they take to ramp up their plant? Significant. You know, and Arafura is going to take a long time. And Aluka, Tronox, they're going to take a long time. All kudos for giving it a crack, but these are not easy projects. You know, I think about the money that governments throw around, and I think really, I'd rather see I think I went to a mining lunch, a WA mining lunch, and it was a lithium producer that got up and spoke, and the comment was, great, if we get singled out by the government, we get a handout, fantastic. But you know what would actually be better? A government that actually thinks beyond individual companies and says, well, how can we create a level playing field? Where can we really help? Where can we levelise the cost of power? Can we do some of those smarter things rather than... Because I just worry about the government is singling out individual projects with big wads of our taxpayer money, right, for projects that they don't understand, you know? Look, Serra Verde, I know that flow sheet. I know the some of the operating challenges that they're having. I think they'll get there. But the economics are not the same. It's not a truly ionic clay deposit for starters, which is why their recoveries are so much lower. Now, I'm not here to bash on Serra Verde, but I'm just stating facts. It's just amazing to me that $2.8 billion gets thrown around for a project like that. So if you're asking me whether it makes sense to be swallowed up and you know, by the likes of a USA Rare Earths, no, because I feel like we've selected a plant capacity and a sweet spot on the economics in terms of, you know, the capital intensity. And so I think the world's our oyster going forward. I don't know if that answers the question. But.
Yeah, thanks, Ross. You might have opened up a whole new discussion point there, but unfortunately we have run out of time today. So can you please put a hand together for our panellists? Drinks will now be served in the exhibition area, and we hope to see you all back here at 9 a.m. tomorrow, where our friends from the US and UK governments will be opening the conference. So we'll hopefully see you then and get the room packed out. Thank you.